Morning.
Hello everyone, it's Melinda Jennison speaking. I am the Director of Streamline Property Buyers here in Brisbane, and welcome to another Brisbane property market update, which will summarise all of the data up to the end of July 2025. Let's get started. First of all, listings. We know Brisbane has been in a low for several years now. We look at that long-term trend where listing volumes were anywhere between 28,000 and 32,000 in total. Now we're back down around 16 to 17,000. So that's a lot fewer properties available for sale compared to our long-term average. And when we zoom in on the month-by-month trend, you can see there over the last 3 months, we've had a shrinking volume of properties that have become available for sale, and the total volume is continuing to reduce. So not good news for property buyers in the market when the available options are actually reducing. Looking at sales volumes, which is an indication of demand, they haven't changed a lot in the last 12 months with only negative 0.9% reduction. So we've still got that heightened demand that we were seeing this time last year. Now, buyer demand is still very strong. When we look at those auction clearance rates, you can see they have lifted significantly throughout the month of July compared to both May and June. And this is Totality data. So when we're looking at auction clearance rates, sometimes we can see that as buyer sentiment, but it also often tells us a little bit more about sellers. We were seeing throughout May and June a lot of registered bidders at properties that were going to auction. However, a lot of sellers were not willing to meet the price point that buyers were prepared to pay. In July, there was definitely more matching of buyers and sellers at auctions, and that clearance rate as a result obviously lifted. Days on market currently sitting at 25 days. Last month, it was also 25 days, so no real change there. But 12 months ago, it was 16 days. So in some parts of Brisbane, it's definitely taking a little bit longer for properties to sell. Definitely some price points, especially the higher value properties, are taking longer to sell. However, in those more affordable markets, and especially in that unit and townhouse market in inner and middle ring locations, the buyer demand is still strong and days on market is very quick. So you must be ready to buy and transact if you are in the market for that type of product. Looking at dwelling values now. So this is Totality data for Brisbane throughout the month of July. We saw an increase of 0.7% in terms of median dwelling values. That is a combination of both houses, units and townhouses. That puts quarterly growth at 2.3% and annual growth at 7.3%. So you can see based on other capital city markets, Brisbane's still performing relatively well compared to some other markets which have really slowed down. In terms of the PropTrack data, also this shows that the Brisbane market increased throughout the month of July, and the quarterly and annual trends are also consistent with Totality data. Now, this is Totality. Once again, this is the price growth segmentation. It divides all property transactions for dwellings as a whole into the most affordable segment of the market, the middle segment of the market, and the most expensive segment of the market. And it allows us to determine which part of the market is growing at a faster rate. Now, you can see here in Brisbane, it's the lower 25% of property values that are growing at the fastest quarterly growth rate, with 2.7% change in the 3 months up to the end of June. Whereas the top part of the market, that's the most expensive segment, that's growth is sitting at 1.7% for the quarter, with the middle segment sitting at 2%. So this also helps us understand the shift because of the affordability constraints. A lot of those units and townhouses as well will be at the more affordable end of the market. And because that segment of the market is typically growing at a stronger rate, some of this dwellings data is being skewed because of that change in the composition of what is selling. When we look at house values, looking at the Totality data for the month of July, Brisbane showed 0.7% growth in houses. That put quarterly growth at 2.1% and annual growth is sitting at 6.7%. Now, Brisbane as a capital city market has a median value for houses now of $1,019,865. We are the second most expensive capital city market when looking at median values behind Sydney. Of course, the median values in Melbourne are lower. What we've said previously, and we will continue to say, is that the value per square metre of real estate here in Brisbane is still more attractive than the value per square metre of real estate in Melbourne for houses. So it is important to understand what a dollar value buys in each capital city market and not just look at the raw number. And that's typically because in Brisbane, our houses are larger, our backyards are larger, and this contributes also to higher median values. Looking at the prop track data, we also saw throughout July positive growth on a monthly basis, and that coincides with the annual growth being positive in line with the Totality data. Looking at the unit market. So again, back to Totality, in the month of July, units shifted 1.1%. So this is more superior growth, yet again, in the unit and townhouse market compared to the house market as a whole. Quarterly growth sitting at 3.2% and annual growth sitting at 10.6% in this segment of the market. Now, for a lot of people, it is hard to believe in Brisbane right now, the median value for a unit is $727,110. Again, we are the second most expensive capital city market behind Sydney when it comes to those median unit values. And growth in this segment of the market has been extremely strong. It has outpaced the housing market over the last 2 years here in our city. And in fact, in Brisbane, the unit market continues to outperform when comparing it to the house market, which is in contrast to the national trend. So if you're hearing in local media that house values have overtaken unit values in terms of growth, that is not the case here in Brisbane. And that's why segmenting the data by capital city and location becomes very important. The prop track data also shows that monthly growth here in Brisbane was positive and annual growth in line with the Totality data. Now, looking at property value changes, what is interesting here is what has been happening in the last couple of years, specifically in the unit market. The units are those light blue lines, the houses are the dark blue lines. And you can see the trend in the last 4 to 5 months in the housing market that the property values are re-accelerating in terms of the rate of growth. In the unit market, we're still seeing strong month-on-month growth performance, and it is outpacing the housing market. So this is also partly driven by affordability because the unit values are lower than house values, and people are wanting to live in locations that come with lifestyle and amenity, including access to good schools, access to good coffee, and also access to public transport and employment. Looking at the 12-month value changes, here we've got each capital city market segregated by the housing sector and the unit market sector. You can see Brisbane clearly an outperformer there, especially in that unit market with around 11.8% growth over the last 12 months. Perth slightly above Brisbane in terms of that annual growth in the unit market. The house market here in Brisbane also has been a strong performer, certainly one of the top 3 or 4 capital city markets over the last 12 months. In terms of East Coast capitals, you can really see Brisbane has outperformed compared to Sydney and Melbourne in both the unit market and the house market. And this is a clear indication as to why we consistently say that Australia is not a single property market, and it must come down to local drivers of supply and demand. 3-month value changes, of course, over the last quarter. We've seen a shift to the Northern Territory. Darwin property is outperforming in both housing and the unit sections of the market. Brisbane still performing strongly regardless of the outperformance by Darwin. So it's a consistent long-term performer. It's still one of the top capital city markets in terms of the last 5-year and 10-year growth as well. Looking at vacancy rates right now in Brisbane, vacancy rates sitting at 0.9%, so very tight vacancy. It's not the case at all suburbs or in all areas across Brisbane, and in fact, there are some areas where vacancy rates have actually trended upward of 3%. So while citywide it's still very tight, it is important to understand what's happening at a local level. Annual change in rents. So for houses, we've actually seen rental price growth start to re-accelerate. We've got 4.3% annual growth in house rents, and in the unit market, we've got 5.6% annual growth. What's interesting here is that now that we're starting to see house rents and unit rents re-accelerate in terms of growth, we're going to start seeing those yields compress further. So right now for houses, the current gross yield for a house in Brisbane is sitting at 3.4%. That's down from 3.5% at the end of June. And in units, it stayed steady at 4.5% gross yields. Obviously, as prices continue to increase, unless we get the same corresponding increase in rents, we'll see those yields continue to compress. That said, in the unit market, we are seeing stronger growth in both prices and in rents. And so that is why the unit market is still maintaining a solid gross yield. So just to summarise, the photo on the left is a real lineup that existed for a townhouse in the inner southeastern suburbs of Brisbane. Very strong demand in this segment of the market, and a lot of properties are selling after the very first open home. So you must be ready with finance and strong conditions to be able to secure these sorts of properties. Unit prices did rise 1.1% in July and 10.6% annually. And this is definitely outpacing the rate of growth in the housing sector. And it is indicative of the more affordable, low maintenance options being in high demand right now. The strongest growth when we do segment the data is definitely still in those lower value properties across the city. Entry level homes are transacting faster as well than those premium properties, and we're seeing that in the number of days that these properties are taking to sell, but also in the volume of buyers that are consistently looking at different types of properties in different pockets across Brisbane. Listing volumes also remain well below average, and this is of course creating that upward pressure on prices simply because demand is outpacing supply. And we know construction activity and dwelling completions are lagging well behind national targets. So this is not something that we expect will change anytime soon in the current market in Brisbane. And because of that, we continue to expect price appreciation across both segments of the market into the months ahead. If you'd like to connect with us to keep up to date with what is happening in Brisbane outside of these monthly updates, please scan this QR code. You can get access to all of our information, blogs, as well as some useful resources to help you on your property buying journey, or alternatively, if you'd like to explore partnering with a buyer's agent in Brisbane, please reach out to our team. You can book a call through this link as well. Thank you so much for your time. We look forward to updating you again next month. Bye for now.